Hey everyone, today we have an exciting episode on tax-free savings accounts, better known as TFSAs. You've probably heard a lot about this term and always wondered what they are, how they work, and why they're so important. Why are people always talking about TFSAs? Well, today we're going to answer those questions. Let's start with exactly what a TFSA is. A tax-free savings account is a special account in Canada that can hold cash, stocks, bonds, mutual funds, GICs, and yes, even gold. The thing that makes TFSAs very special compared to other accounts is the gains that you make on your investment are all tax-free. The usual tax that you pay is called a capital gains tax. So how that tax works very quickly is 50% of your gain is taxed at around 15%. So if you sold a stock and you made $1,000 profit, you'd be taxed 15% on $500, so about half your gain. That's why this account is so powerful, because all the gains that you make are tax-free. The TFSA is actually a pretty modern invention, as it was only started in 2009. You must be 18 years old to open a TFSA account and start contributing to it, and you can take your money out of the account whenever you want, again, tax-free. So let's get into how this thing actually works. Every year you have a limit of how much you can contribute into this account. And who decides that limit? Well, it's the government, of course. Usually it's about $5,000 a year. One year it was even as high as $10,000. In 2019, it was $6,000 that year. The contribution room you get is cumulative, meaning just because you didn't invest in 2019 doesn't mean you lose that $6,000 contribution room. Actually, every year the contribution room keeps adding and it gets carried forward to the next year. And so it only goes down when you start investing. So say you were 18 years old in 2009 and never contributed to a TFSA. As of January 2nd, 2020, you would have $69,500, so about $70,000, of contribution room you could use towards your TFSA. Okay, so that's all good and well, but how does this account actually work and how do I contribute to this to get those tax-free savings? Well, the TFSA is not a mystical, scary thing at all. All it is an account. You open the account just like you would a checkings or savings account, you put money into that account, then you buy things from there like stocks and bonds. You can open the account in a lot of different places, for example your local bank, so think TD, Royal Bank, Tangerine, or through a trading platform like Questrade or Wealthsimple. No, you can only open a TFSA at a recognized institution. I personally have a TFSA at Questrade, so I'll walk through my own experience. I went on the site and created a login. From there it asked me what kind of account I wanted to open, so retirement savings plan or whatever, so I picked TFSA. Then I had to fund the account, so I moved money from my TD checkings account and transferred it over to my TFSA account, so let's say like $1,000. Then I used that money to buy stocks through Questrade platform, so I can buy things like Amazon stocks or Apple stocks or whatever. Then I can sell those stocks through the Questrade platform. The money that I get from the sale will still sit in Questrade, and then I can move that money to my TD account, and of course all the gains on my sale are tax-free. If you open up that account, let's say at your bank, it'd be similar. So I could go to TD and open up a TFSA there. I could transfer however much money from my checkings account to the TFSA account. Then I could buy stocks or mutual funds through the TD platform, and they would sit in my TFSA account there. When I wanted to sell them, I could whenever I wanted, and the money would go back into my checkings afterwards, and I could call it a day. You can have multiple TFSA accounts at multiple institutions invested in totally different things. The decision is up to you and what will work best for you and your investment goals. And just as a sidebar, I suggest speaking to a financial advisor or professional that you trust about the best investment strategy for you based on what your own risk tolerance is and what your objectives are. So if you're saving for, let's say, a car or a house or just passively saving, investing can be very scary without the right knowledge and guidance, so please be responsible before you invest your money. One thing I also want to get into more in depth is how the contribution room works, because it's not exactly straightforward. So there's a hard limit number you can contribute that I mentioned earlier, which is a $5,000. But for this example, let's just call it $70,000. If you made an investment in January 2019 of $1,000, the amount of room you have left is $69,000, right? So it's 70,000 minus 1,000, 69,000. So let's say you bought Apple stocks for $1,000. Now let's say in June 2019, 6 months later, those stocks have gone up a lot and you want to sell them so you can get those tax-free gains. So that $1,000 you initially invested isn't gone forever. Your room isn't $69,000 forever going forward. Per the rules of a TFSA, you actually get that $1,000 of contribution room back, but you don't get it until January 2020. So in 2019, the most you can contribute is $69,000. But in 2020, because you sold that investment, it goes back up to $70,000. So what happens if you contribute too much? Say you invested more than your $70,000 limit. What would happen to you? Well, it's simple. You would have to pay a penalty. The penalty is 1% a month for every dollar you over-contributed by. So say you put $72,000 in. That means you're $2,000 over your amount. So the penalty is $20 a month. One really common reason people over-contribute is they don't wait for their room to refresh in the following year. A lot of people just assume that you get the room back immediately when you sell. So in the early example, once you sold those Apple stocks in June, a lot of people think, oh, I get that $1,000 back now. Then they keep investing and end up going over their limit instead of waiting to January 2020. When you over-contribute, you have to pay the penalties to CRA, and CRA is pretty strict about them, and they never really take ignorance as an excuse. You can appeal your fines if you like. You have to fill out a special form. It's called an RC 243 and attach a letter saying why you went over. But just remember that saying I didn't know this was the rules usually doesn't help you. Also, let's cover what happens if your investment loses money. So say I bought $1,000 of Apple shares like before, and the investment goes bad and the markets go down, and now those shares are only worth $800. So if I sell those Apple shares, I get $800 back, but my contribution room still goes down by $1,000, not $800. The contribution room is only affected by your initial investment, not about how much you got back. Finally, as we start to wrap this up, the last thing I wanted to talk about is what to avoid doing in your TFSA account. The CRA is very serious and cracks down hard on people who trade actively. See, the purpose of this account is for you to invest your money, it grows over time, and then the money you get back is tax-free. What they don't want is people who are day trading, making tons and tons of money with frequent trades, and claiming it as tax-free. If you're caught actively trading, the CRA will remove your tax-free status, and you'll have to pay all the taxes on it. It's up to the CRA ultimately to define what is day trading, but if you're using it for what they call business-like purposes, you're probably going to get in trouble. If you're ever confused, you can always call the CRA and ask them if you're okay. And one final resource I want to share is if you go into your CRA account online, it'll tell you right then and there what your contribution limit is, so you know not to go over for that year and how much room will be available to you in the next year. Well, I hope that clears up some confusion about the TFSA accounts. I hope you learned something, and if you did, remember to like, share, and subscribe, and thanks for listening.